Hello, it's Robert Miner with Dynamic Traders Group with this week's 5-minute update and trade strategy for our Twitter and YouTube followers. I'm going to look at two very important markets, one in a little bit more detail that I know you're all going to be interested in. If you want to learn more about what we're talking about here, check out my book, High Probability Trading Strategies, and go to dynamictraders.com and check out our DT reports. Let's get started. And this one is going to be a major trade setup here in the next few days. I want you to be prepared. And that setup is going to be with gold. And this is the weekly chart. I've talked about gold on and off for weeks, so you should be prepared for exactly what's happening now. This is the weekly chart. We have probably made a weekly low in this past week's what we call a reversal week. Our weekly momentums, I've made dual look back bullish reversals, and our DT oscillator, our unique proprietary indicator that is, I think, the best that you can have to identify momentum highs and lows. And we've made this reversal within 1 week of what should have been or should be the maximum to complete a corrective low. This is a corrective pattern. Came right down to the 38-50% retracement zone of the wave 3. Let's go to the daily. Here's the daily coming down off of this potential wave 3 high. This is a correction. It's a complex correction. We never know when they're going to be finished, a complex correction, anything other than a simple ABC. So we have to look at other technical factors to help identify when it's finished. And one is like when our weekly momentums, the higher time frame momentums, are oversold. Another is when we get into some key time and price relationships. Well, as of the last Tuesday, where we made this new low on Tuesday, three things happened that indicates that final weekly low and wave 4 low is complete. 5-wave decline to a new low. Following day, dual time frame, a daily momentum, a bull reversal, which the next day was the signal, at least for the people that subscribe to us, for the long position with really minimal capital exposure. Minimal capital exposure. So we're already long, and we're actually down a couple bucks here on Friday. So we got lots of time to enter on the long side against a stop on this low. So here's, I did a 20-minute video tutorial for our subscribers this past week, for Friday, for yesterday, and it's about what W.D. Gann taught us about the safest time to enter a trade is on the first reaction against the new trend. Well, we'll just cut it kind of short here and say, I believe we've begun a new trend, a bull trend. So we look for the first correction. Elliott wave terms, it's a wave 2 or a wave B correction. And one way we can do that, and this will be several days out if you want to wait for this, is the next cycle in the daily momentum. The next daily momentum bull reversal will put the daily and weekly momentums in sync as long as that daily momentum bull reversal is made with price above this low. That'll be a textbook setup for a long trade. So we're only a few bucks off of the low. So it's an immediate position to go long, or you can wait for the safest time, as W.D. Gann said, on the first correction against the new trend. And that'll be the next go long signal a few days down the road. What a fantastic setup, though, and it's the same with silver and the GDX. And this is just textbook, everything in place to complete a weekly low and possibly a monthly low. And I could be wrong, but the capital exposure or the dollars, the risk is so small to position on the long side for a potential eventual new high against last week's low. Boy, great setup, type of thing that we have the patience to wait for. Here's the GDX, basically the exact same position. It looks like the gold chart. And it ought to look a lot like the gold chart since these are mining stocks. But if you're a mining stock trader, again, last Tuesday, outside reversal day, daily momentums bull reversal where the weeklies were oversold right in that wave 4 retracement zone. We're in immediate position on the GDX for long trades. And if you want to wait a few days for the first correction against the new trend, that'll be a setup, maybe even with a little bit less capital exposure. Again, a fantastic setup for potential major advance with minimal capital exposure. I could be dead wrong, but the technical part of it is telling me that it's worth taking a trade now, and it's the type of thing I've been waiting for several weeks. I did a major report last week for subscribers on the stock indexes and bonds and notes. Bonds and notes have the outcome is exactly as anticipated. We've probably completed this major low, and the final low for this year anyway. We're going to be sideways up more than likely through the end of this year. And bonds and notes, a great trade set up a couple of days ago to be long with very minimal capital exposure. I laid out the case for a probable high this past week in the stock indexes and the probable high for the year. Well, look at Friday. We had a big up day on Friday. I'm not going to go into the details here. Take a listen to the update that I did for notes and for stock indexes last week. Nothing's changed. You wait until you see what's going to happen Monday and Tuesday, I think at least. So be prepared for that. And don't get overly bullish with this big update on Friday, because I think you're going to see a surprise coming up here in the next 1, 2, maybe 3 trading days at the most. That's it for today. Take care.